Literally everyone around me is talking about NVIDIA right now. So when I say everyone, I'm not even exaggerating. A few weeks back, my partner, who has zero interest in the stock market, asked me about two stocks. Want to take a guess what were the two names? Leave in the comments below before I reveal the answer. Ready? The first stock was GameStop, and the second, like you've guessed it, it's NVIDIA. Of course, this is just a recount of my anecdotal experience, but the inevitable question that pops into my mind is the famous quote from Joseph Kennedy. If shoeshine boys are giving stock tips, then it's time to get out of the market. And right now, are we really near a market top? So in this video, we'll be exploring both sides of the argument, both for and against NVIDIA, and I'll give you my conclusion if you stay right till the end. Now, let's try to first dissect why NVIDIA is so popular as a company before even talking about their share price. So NVIDIA was initially known to a small group of lay people, specifically gamers, because of their powerful GPUs that delivered the greatest experience for graphically intensive games. And the next batch of users came from the surge in demand for mining of cryptocurrency, as NVIDIA GPUs were essential for mining operations. And the last wave, which is now the mainstream and what we are experiencing in reality today, is due to the proliferation of LLMs, which in short means large language models. ChatGPT was the tipping point. Today, especially looking at people around me, everyone has kind of incorporated some portions of GPT into their workflow and even their daily lives. From creatives trying to brainstorm ideas to internal auditors trying to use large language models of some sort to enhance internal processes, to coders even trying to debug the system. The use case is literally all-encompassing and everywhere. The company powering all this? NVIDIA and NVIDIA's chips. Some think that NVIDIA's astronomical rise to the top is a bubble. But when I try to map out the real-world impact NVIDIA has delivered, it seems like a sea change. So we have witnessed time and again, whenever we are talking about something foreign, something extremely innovative, and something that's never been seen before, the stock market can sometimes get ahead of itself. So in 2024 at least, NVIDIA is the one that has led the market. Forget about the Magnificent Seven. Forget of your FANG, forget of your Mama stocks. Forget about all these abbreviations that contains the top US tech names. It's literally the Magnificent One that is carrying the entire index today, NVIDIA. And we have started to observe that there is a vocal minority trying to call for the top, claiming that valuations seems overextended, with posts like these even suggesting that we are currently in danger zone, with stocks looking very expensive, hitting record high prices, price to sales levels even higher than dot-com era back in the 2000s. So we have also seen many people insinuating that NVIDIA might be the next Cisco, considering their current trajectory and how everyone is going crazy about artificial intelligence in the recent months. Everything is about AI, very much like how the internet was poised to change the world in the late 1990s. Sounds familiar? So let's first get this straight on the record. So when looking at a chart like this, it only provides you with a single dimension when looking at stock valuations today. Sure, it does signal to us, plainly, that the companies of today, on a per dollar sale basis, are a lot more expensive compared to before. But it does not take into account many other important factors, such as the quality of the business, the future growth rates, how big is the addressable market, and the prospects of all these sales, and most importantly, their margins. So if tech stocks of 2024 are growing much faster, much more profitable, with double the margins compared to 20 years ago, then having the price to sales ratio being doubled might potentially be justified. If we were to judge based on another valuation metric, specifically the price to free cash flow ratio, UBS has put forth the opinion that the PEs of today are a full standard deviation lower than that in the late 90s. And on a free cash flow basis, the S&P 500 is actually 2 standard deviation cheaper. But do note that this comparison might not be 100% accurate because the first graph shown was actually comparing the price to sales ratio of the S&P tech companies, while this second one looks at the overall S&P 500. But the main point still stands. Any valuation metric shouldn't be looked at on a standalone basis. Now, if we pivot back the discussion to NVIDIA, comparing NVIDIA of today with Cisco's of the 2000s, and whether this would be the .com 2.0. I think this conversation on the BG2 pod gives us a good framework to think about the similarities and the differences.
You know, we've got $3 trillion companies now. Is this sustainable? Are we in a bubble? What was surprising to me was knowing Philippe the way we do, is he showed a slide of the earnings growth of NVIDIA, right? Comparing it to Cisco from the 99-2000 period. In the case of Cisco, the earnings multiple more than tripled during that period of time. But in this case, because of the earnings growth of NVIDIA, the earnings multiple has been flat despite the fact that the stock is up nearly 10x. So he seemed to suggest, Bill, that we're not in an AI bubble. In fact, he showed an S-curve saying Coatú's view is that it's going to be even bigger than people currently think.
If you go to the past and start to notice 1 to 3 companies just materially blowing out numbers above everyone's estimates over several quarters,
right,
there may be something happening that you should pay attention to,
right,
which is, you know, a valid argument, right? Add one thing to it just from dinner last night. You know, I get to see people that I may only see once or twice a year. There might be executives at some of the Mag 7 or other VCs at other firms. And one thing that was congruent across them all is they all feel a bit like a kid in a candy store with AI. It's like there's a new toy to go play with. And I think from a intellectual curiosity standpoint, like I see smiles and excitement and like, so it's clear to me that the vast majority of people here, not just the team at Coatú, believes this is a mega wave that is kind of everyone's got to be all in on. Because all AI tools are being delivered as a service in the cloud, there's just a massive amount of CapEx happening. And if you go back to the internet wave, you know, people were buying Cisco products, you know, maybe WorldCom, you know, was putting CapEx into the ground. Yes. Equinix was putting CapEx into the ground. But it wasn't like Microsoft or Netscape or whoever, you know, the Yahoo. They weren't really plowing this into the ground. And I think the risk of the type of things that could happen with a reset are higher when you're putting all this into the ground. And Satya very quickly said this is a supply-driven wave. And I think up to date, that is true. Yeah. We're building ahead of demand. For sure. A lot of the startups and CIOs qualify the current AI work as experimental.
Right.
Not all of it. Right. So, I mean, the coding stuff, we've been through this. Like there's a lot of it that's real.
Now that you have stayed till the end of the video, here's my opinion. So don't hold Piranha Profits accountable. It's my personal opinion. First, I don't think that we are exactly in bubble territory yet. The excitement around AI is definitely there, but it doesn't feel as widespread and even prevalent compared to other market hype cycles, even in 2021. Second, when considering most valuation methods today, prices of some stocks can seem expensive, but the overall index is not superbly overvalued. In fact, there are quite a number of famous stocks that are near 52 weeks low. The market could still go into a correction from here, who knows, but I think we are not at absurd levels when you compare to peak bubble territory. Third, NVIDIA as a company has continued to amaze me for some time now. Is it a high quality business with superb fundamentals? Without a doubt, yes. Am I a shareholder of NVIDIA? Sadly, no. The next closest stock that I have in my personal portfolio is TSMC. But the question then is, would I be buying NVIDIA today? I'm afraid its current valuations is too hard a pill for me to swallow right now. And as of the time of this recording, they're trading right around $125 per share. So considering the hype around the stock market lately is all about semiconductor and AI, any company that talks about AI probably will see the share price appreciate. So it might take some time for a significant enough retracement or even correction on some of these names. So for myself, I do have some sort of a price target or even fair value estimation of NVIDIA today. Even Adam has recently made a video giving NVIDIA $120 per share fair value estimate. So my personal estimation differs slightly from Adam, and I would like to know how much you value NVIDIA today. So leave it in the comments down below. And for those of you who like a breakdown of my own estimate and my own projection, we might do a follow-up or even part 2 on this whole end. So this is CK from Piranha Profit signing off. Till next time, as always, keep winning.